Welcome to Token Topics. XRP and XDC are the main topics. Huge developments are going on throughout the UAE for not only Ripple but also the XDC network. We're going to look into that and much more. We are also going to hear words from Andy Schectman on Dedollarization, BRICS, gold, a reset, and central bank digital currencies. You don't want to miss this exciting video. Please do hit the like, share, and subscribe if you love the content. With that out of the way, let's go ahead and dive in. Keep your crypto safe with a DCENT biometric wallet. What talks about exchanges going down and cyber attacks, it's smart to keep it on a hardware wallet. Purchase it now through Token Topics and receive a discount. I'm going to put the affiliate links in the description below. Uphold recently tweeted, "Do you love XRP? Check out a few other assets you might like." I love the fact that they put XDC network up at the top. There's also Casper Labs, there's Stellar XLM, there's Quant Network and Hedera Hashgraph that I talk about on this channel. And those other assets are excellent as well. The reason why I'm showing this is because the whole lawsuit can get repetitive and can get kind of boring. I am by no means telling you to sell your XRP or get rid of or get out of XRP. All I'm stating is if you get too caught up with the lawsuit, you might be missing out about learning about these other blockchain projects or investing into them. I love the XDC network, and the fact they put that up at the top, I think is pretty significant. Now, if you hold XRP and you haven't looked into the Xinfin XDC network at least a little bit, or if it's been some time, maybe you looked into it in the past, but now you're thinking about, looking at other assets, definitely look into that. I talk about it on this channel quite a bit. Now, we've heard from Brad Garlinghouse, David Schwartz, and other very intelligent people in the blockchain industry that it's going to be a multi-chain world. And in fact, if you think about it, if everything was relied on just one chain, that would be a very, very dangerous world. That would be unstable. Imagine if the network goes down. That would be like Armageddon. The fact that we have the Quant network working as an overledger, basically as an operating system, as a security, also has a security protocol. If one of the networks goes down, it can bypass and operate on another network. That is genius. That is incredible and very safe. Just like I stated, one network handles everything. That would be extremely dangerous. But I believe the top ones are XDC, you got XLM, and I love how they put Casper up there. Now, if you're wanting to learn more about this, go ahead and check it out. I'm going to put the link to this down below. Next, so the big question, will Ripple take it all the way to the Supreme Court? Wow. I'm sure people in the community do not want to hear that. But there's a possibility that the price of XRP still could shoot up through utility even before this lawsuit even ends. And that could have been the whole plan. If somebody were to ask my personal view, I do believe it's going to the Supreme Court. Yes, I think they're going all the way to the Supreme Court. So, okay, let's go into this article. So as the legal battle between Ripple and the U.S. Securities and Exchange Commission continues to await the ruling from Judge Torres of the United States Southern District Court of New York, Ripple's chief legal officer has spoken out with a striking statement on Twitter. The belligerent statement comes at a time when the SEC is conducting a supposed Operation Choke 2.0 against the crypto industry. It also faces the first day of trial in 2 weeks of the litigation over a Bitcoin spot ETF with Grayscale. Stuart Alderati stated that the SEC has lost a total of 4 of the 5 cases that it's made to the Supreme Court. So the big question is Ripple willing to fight in the Supreme Court? The statement is causing a stir in the XRP community, and that the reference for the statement is not entirely clear. Does Alderati imply that Ripple is willing to go to the Supreme Court in case of an unfavorable outcome of the court case? Or is Alderati just pointing out that the SEC often has a poor case record against the strong opponents who oppose the agency's overreach? I think what he could be doing is sending a clear, strong message to the SEC that, hey, if you want to go to distance, that, look, you don't have a good track record. You typically lose. So if you want to go that far, we're really going to drag you through the mud and we're going to win. Excellent tweet here from RizXRP. This is Rosie Rios. And ask yourself, what would you do as an investor? You'd follow the money. Where is it going? Metaverse, blockchain, and AI. Let's go ahead and give it a listen.
As an investor, one, I would follow the money. Yes, it is my name on U.S. currency, almost $1.8 trillion with my name on it in currency in circulation, so no one has made more money than I have. But if I were following the money, where is it going? It's going to the metaverse, it's going to blockchain, it's going to artificial intelligence. Technology and innovation will be the key. And here's what's important to remember. In 2007 and 2008, we saw a huge growth of investment in technology and innovation. This was during the downturn. What was invented in 2007 that has turned our world upside down today? Anyone? The iPhone. Very good. The iPhone was invented in 2007. There is no doubt, and then obviously subsequent to that, you saw Facebook, you saw Google, you saw Airbnb, you saw Uber. In one of our biggest downturns, innovation still mattered.
The UAE-based Joy Lucas Exchange announces a partnership with Ripple. Even though Ripple hasn't yet made an official announcement about its new partner, Matthew's language is rather transparent. He expressed that the business will employ the on-demand liquidity-based technology to streamline its cross-border payments with it. The Joy Lucas Exchange is a multi-billion-dollar global business and a well-known name in the jewelry trading industry. According to the exchange website, they offer a wide variety of remittance alternatives to every customer and promise the best price when it comes to cross-border transfers. That's not the first good news that we've heard between Ripple and the UAE. This is back in December that Ripple partners with JP Morgan to conquer the UAE. Brad Garlinghouse, I believe, don't completely take my word for it, but I believe he stated, I think it was funny, I think it was being sarcastic, saying that he didn't believe that they had any connections to the UAE, and then he looked around and he said, do we? And obviously, so this was not too long ago. One of Ripple's Labs' strong partners in the UAE, Al Farden, has joined hands with Wall Street banking giant JP Morgan. So this is back in December 6th, which is not too long ago. Al Farden is one of the leading licensed and regulated platforms in the UAE for money transfers and currency exchanges. The two players will work to facilitate a same-day money transfer facility for the UAE corporate customers. Here they call XRP a standard. So Ripple's XRP Standard is one of the most sought-after solutions used by global banking institutions and cross-border settlements. In the latest development, the Bank of Australia's largest financial conglomerate, Combank, said that they would be Ripple XRP and ISO 222 standard for cross-border payments. Let's not forget the National Bank of Abu Dhabi was, I believe, the first, it states here, the first Middle East bank to use Ripple for cross-border payments. There's a lot of very exciting things happening for the XDC network. Sarah McHale posted, Impel, built on the XDC network, is thrilled to be one of the speakers in tomorrow's Association of Corporate Treasurers, Middle East Technology, and Innovation Forum. Our leaders, Troy S. Wood, will talk about Impel's next generation ISO 222 API solution for cross-border payments in a panel with Swift and Microsoft. Boom. Very exciting. I can't wait to see what develops from that. The XDC network has really been laying down some incredible, groundbreaking developments throughout the UAE. Next, check this out. This is posted by Global Trade Review at the ITFA Middle East Regional Committee seminar on day 2 of the GTR MENA 2023, hosted by our partners from the Middle East Regional Committee of International Trade and Forfeiting Association. Experts discussed issuing notes and tokens for institutional investors and extending trade distribution to retail investors. This is very exciting development for the XDC ecosystem. There you have Andre Kasserman. You also have Sunil Senapati, the Chief Operating Officer of Xinfin, powering the XDC network. Next, you can see this nice picture here. This is Doug Brooks who posted this, who's a Senior Advisor of Special Projects and Tokenization. So that's Doug Brooks with Star of Xinfin COO Sunil Senapati. At the Global Trade Review, he states, looking forward to another fantastic day of engaging conversations and connections. Also looking forward to Sunil's talk later, together with Andre Kasserman, on introducing tokenization into capital markets and trade finance. In case you didn't know, you can perform cross-chain transactions of Bitcoin and XRP on the XDC network. There's a lot of newcomers learning about XDC. They might not have known that. That comes to us through the on-chain bridge. And recently in October, not too long ago, a on-chain upgrade allows 4 native XRP Ledger tokens to bridge through the XDC network. All right, this is pretty big news for the XDC community. The XDC network introduces the DAOFIN, a step towards decentralization. A sudden demand for decentralization is being observed across the community. The XDC network announced its steps forward towards decentralization by launching the DAOFIN. The DAOFIN or DAOFIN plan has been released for public comment, which will end on March 15th. With the fall of prominent centralized crypto exchanges, a sudden demand for decentralization was observed across the community. As an answer to this, the XDC network, a blockchain network, announced that its steps forward towards decentralization is being launched in its new DAO framework. So, according to the XDC network, the team DAOFIN aims to decentralize the development and management of the network's ecosystem. The DAOFIN or DAOFIN framework will fund, manage, and execute network upgrades, improvements, and other ecosystem projects such as decentralized apps and tools. The DAOFIN plan has been released for public comment. This public comment period will end March 15th. XDC Network claims this process is done to understand the public's opinion about this project. That is a bright idea. So furthermore, they will elaborate that there will be a 30-day break to revise the plan after receiving the feedback and before sharing the final draft with the community. Now, as the XDC network grows, and they're working on a fully decentralized community right now, we know that the XRP ledger is decentralized as it grows and more nodes are put on the network. It becomes more decentralized. A new world is emerging before us. The death of the dollar, as we know, as the world's reserve currency, is fast approaching. Now, the dollar is not going away. It's going to be refaced, but it's not going to be the world's reserve anymore. BRICS nations are rising to the challenge to dollar. They're going back to gold and want to participate in a decentralized blockchain level playing field. The whole world does. Now, Andy Schectman is a very knowledgeable man on precious metals, and I've been following him for some time. I've been listening to him, and I can tell you he's very intelligent and he knows what he's talking about. Let's go ahead and hear him.
Been the challenge to the dollar-dominated monetary system. And my next guest says a global monetary reset is already underway. Andy Schectman is the president and owner of Miles Franklin Precious Metals. He has 3 decades of experience in the precious metal sector and is a very well-regarded expert on monetary history and political economy. Welcome to Kitco, Andy.
Thanks for having me, Michelle. It's great to be here.
It's great to have you. Although, as I said to you earlier, it's a little bit terrifying hearing what you break down for us. And it all hinges off this idea of de-dollarization, which seems to be gaining momentum following Russia's invasion of Ukraine and the way the dollar has been increasingly weaponized, taking Russia off the SWIFT system. The BRICS taking notice of this and saying, well, perhaps we should have our own currency backed by commodities. We've seen those conversations happen and develop following the withdrawal from Afghanistan, which arguably was a disaster. We had Saudi Arabia question whether they want to be part of the BRICS and question their relationship with the United States. And we've also got Russia, for example, offering to help Iran with a gold-backed stable coin. So we have all of these pieces falling into place. And perhaps not coincidentally, we've also seen central banks buying gold at record rates. Now, you say all of these are just data points that if you connect them together, you see a narrative that points towards a global monetary reset. And it all started for you in 2017 when you saw that the Bundesbank, Germany, was repatriating its gold. So why don't we take it from there, Andy? Break down your thesis, joining those dots for us.
Sure, thank you. That's well done. That's a good roadmap. So it's true. You know, at the end of 2011, as the bull market started to head down into a bear market, by 2017, we saw capitulation on many levels, not only with the retail investor, but also the central banks. Central banks were selling their gold. It really never made a whole lot of sense to me. And by 2017, we were at really at the peak of the bear market in precious metals. And this was when Bitcoin was taking off. And there were a lot of people selling their gold, and talks of central banks divesting of gold and investing in treasuries or income-producing assets. And then out of nowhere, a story popped up that the Bundesbank had been trying to repatriate their gold for a few years, but started to really make a big deal of it in 2017. It caught my eye. Why would they want to repatriate their gold from the New York Fed in the midst of what seemed to be a movement away from precious metals and into other forms of investment? It was very interesting they made such a big deal. And within a few weeks of that, you had the Bank of Turkey and the Bank of Austria and the Dutch National Bank and the Czech National Bank and the Bank of Poland. And all of these banks, the Bank of Hungary, they were all saying, send us our gold back, not just from the New York Fed, but also from the Bank of England. And so it began a movement that really caught my eye. And now in 2018, the following year, this really accentuated when those same banks bought more gold as a group than they did in the 60 years previously combined. Now I'm starting to get really interested and really aware of what was happening. 2019 comes along, those numbers jump by almost 100%, north of 90%. The accumulation of gold by these central banks, which, was out of nowhere, really, if we look back over the previous decade. And then the Bank of International Settlements came out with the declaration of revaluing gold as a high-quality liquid asset. Now, there's been some dispute, is it a tier one or is it a high-quality liquid asset? In the end, they're the same thing. It's as good as cash. When it's a hedged position, it is viewed by the Bank of International Settlements as good as cash. And I think if you look at that and realize that the acquisition of gold and the repatriation of gold, which was almost two and a half years prior to this admission, you wonder, were they clued in on the revaluation of gold or on the reclassification of it? Were they told, get your house in order, repatriate your gold? You might want to stop buying it because we're going to reclassify it as good as cash. So this really started to get me interested in what was happening. And
so just to interrupt you there, would the U.S. have been left out of that conversation?
No, they were not. This was all part of the Basel III.
Right, but I'm saying if they were telling central banks, you should start repatriating gold, this is what's going to happen.
Whether or not they were left out of it or they just decided not to do it or accumulated other ways is, I guess, debatable. And, you wonder where Gaddafi's gold is, where Saddam Hussein's gold is. Just saying, the Ukraine sold at $25 billion worth of gold to fund the war. Where did that go? So I don't know where the U.S., if the U.S. was accumulating gold or if they weren't, or if they were getting it in other ways. But the U.S. certainly wasn't part of the narrative. These were all the Eastern European banks. And ironically, most of the banks that were doing it were either part of the European Union or in that general region, but most of them did not trade the euro. They traded their own currency within the European Union. So these are the banks that I believe ultimately will shift towards the BRICS nations. I digress. 2020, I start to notice the second very interesting piece of the puzzle, and that was the Chinese Belt Road and Rail Initiative. And this is the largest infrastructure project in human history, and it's connecting Asia and Africa and parts of South America and Europe, the old Silk Road.
But that's been developing for, over a decade
now? It
now?
has been, but it really started to gain traction in 2020. And I'm looking at it and realizing that all 13 OPEC producing countries are on the Belt Road. Almost 70% of human population and 40% of global GDP on this growing group of countries. And it's all void of U.S. dollar participation. Most of it settling on the new Chinese digital yuan. And so it started to get I started to get this feeling that, look, a lot of the countries that are part of the Belt Road, China and India and Russia, and these are countries that are accumulating all of the gold and producing all of the gold. And you start to see this growing group of countries and kind of the isolation of the dollar. Now, this really didn't all fit into what I was talking about until shortly after 2021. 2020, the banks are still buying gold. And 2021 rolls around and we see the day that we leave Afghanistan in a very unharmonious way. Saudi Arabia, I think, at that point, signed the death warrant for the end of the petrodollar. The day we left Afghanistan or the day after, and I think there is no coincidence in the timing, Saudi Arabia announces a joint military cooperation agreement with Russia. I often ask...
And just to recap, leaving Afghanistan, deserting weapons, deserting allies,
yes.
deserting personnel.
Leaving our own servicemen and women behind enemy lines was something that would have been considered inconceivable in the United States that I grew up in. And I think that really signaled something to our allies and certainly to our foes. And, I ask people what makes the dollar the world reserve currency, and most people don't know. But in 1974, 3 years after we closed the gold window, Kissinger went to Saudi Arabia and struck a deal with the Saudi kingdom and said, hey, we'll protect you, but for that, you'll denominate oil globally in dollars. And they have through OPEC. And this has created a massive synthetic demand for the dollar for the last 50 years. Signaling a change in that by a joint military cooperation agreement with Russia was a huge, huge move that really got very little, if any, attention in the Western media. But now things are really starting to click in for me, and I'm starting to see not only global de-dollarization, but also groupings that are growing together, like all 13 of the OPEC producing countries on the Belt Road, like shortly thereafter, China and Nigeria, who also signed the same contract with Russia, selling their gold to China for the Petro Yuan bond, which is immediately convertible into gold on the Shanghai Gold Exchange. And this is how countries like Iran have sidestepped sanctions for quite some time, selling their oil to China for a bond that is immediately convertible into gold, and they take possession of it right off the Shanghai Gold Exchange. So these things are starting to speed up at this point, and I'm really starting to notice that there's a growing group of countries that are formulating around the BRICS that are, I think, coalescing against the dollar, the hypocrisy, the hegemony of the dollar. And you could see it, you could feel it, and you could watch all of the gold that was being sent eastward and the accumulation and the de-dollarization. 2022 rolls along and the weaponization of the dollar, as you mentioned, where I believe it's not the prerogative of the West to say who can and can't use the world reserve currency. It should be more for public opinion, not for the administrator of the currency to decide who can and can't use it. And it was that moment, and I often ask people, do you think this was intended? We have 130 trillion in debt, 31 trillion that's on balance sheet, and Medicare and Medicaid and Social Security, which is 55 trillion underfunded in and of itself, and government military pensions, render us insolvent. Most of this debt accumulated at the lowest interest rates in human history. Was it intended? Did we want to pick a villain to create this great reset, to all of a sudden start the de-dollarization? And this is where the story gets very interesting as it turns from here.
Okay, so the dollar starts to unravel in this narrative when Saudi Arabia starts to make deals with China, and the petrodollar is in jeopardy.
Yes.
So you're saying Saudi Arabia is now looking at Russia for protection.
Yes.
And if you're Saudi Arabia, you're thinking two things. For one thing, you're watching how the dollar was weaponized in the Russia invasion of Ukraine, and you're going, well, we don't want that. We can't have that happen to our assets. What if the U.S. wakes up one morning and don't like our human rights policies, for example, or something else, or some other situation that could happen in the Middle East and decides to do the same to us? Maybe this isn't the best way to keep our reserves. But you've also got Russia not really projecting tremendous strength via this conflict in Ukraine. So why would the Saudis make such a bold decision before seeing who is the bigger military power in play?
Yes, that is part of the equation. That's a fair statement. This was before the Ukraine invasion, number one. And secondly, the day after these announcements came out, Zero Hedge ran an article saying Saudi Arabia announces to the world that their nuclear submarines are outfitted with hypersonic ICBMs. This is the technology the West doesn't have. The State Department commented and said they're very concerned about it. These are the missiles that can go Mach 10 up in the atmosphere and hit the ground at the speed of an asteroid. that was, I think, their way of saying, don't even try to do what you did to Gaddafi and Hussein. Don't even think about it. It was a veiled threat, let's say. And I think this is another reason why when you realize that also last year we see the Saudis say, well, we have submitted our application to the BRICS. So you have a growing unison of countries that are joining together that in and of themselves maybe can't project that strength, maybe can't stand up to the West, but together as a group, their militaries are stronger, their GDPs are bigger. I think it's a growing chorus of countries standing up to that hypocrisy. This is how we see a great reset as interest rates spike in relation to a crashing dollar, which then is inversely correlated to asset prices that have gone stratospheric over the last few years, and I would argue irrationally. And as interest rates spike and this inverse correlation hits the shores, stocks, bonds, and real estate, along with the crashing dollar, all collapse at the very same time. And when I ask, do you think it was intended? I guess I'm kind of tongue-in-cheek, but if you think about it, now you have a villain. Instead of blaming the Fed for creating these distortions and letting this happen, you have the Fed there saying they're going to raise rates, but they've done a woeful job at raising them high enough to tackle inflation.
All right, let's break down the relationship between the CBDCs. Well, firstly, is it one CBDC representing the BRICS, backed by commodities? And then how do the other countries come in with their versions of CBDCs?
So I think ultimately it will be one. A lot of the countries...
One universal...
Yes, for the CBDC. But right now they're all creating their own. And the Chinese built something called the M Bridge, as in Mary, M Bridge, which is a cross-border payment system for central bank digital currencies. And they did this with United Arab Emirates and one other company, Singapore, I forgot the third country, but it's irrelevant. The point is that this allows cross-border payments sidestepping the SWIFT system in central bank digital currencies. That's the bridge, if you will, to a common currency, but they are all de-dollarizing. They are all moving away from the dollar as sole settlement. Turkey just created their own. Turkey also imported more gold than any country in the world last year, and they just applied for BRICS. So they're all doing it little by little by little. They asked Ernest Hemingway, I believe, how'd you go broke? Little by little, then all at once.
Slowly, then suddenly.
It's a chess game, and they're moving the pieces, and then they say checkmate, but not until they're all in position. So to your point earlier, your question, timing, don't know, but watch how the chess pieces keep...
So how does gold play into this role? If you're backed by commodities, you eliminate the option of printing, which takes away a lot of power for the central banks themselves.
Absolutely.
As they've been able to do for their own countries. But I get that they would need to do this to have legitimacy on the global stage. So they would have to, I guess, sacrifice the ability to print money in order to be seen legitimate on the world stage.
I think they would do it in two ways. They would not allow it to be convertible, because de Gaulle from France proved that convertible currencies convert, and they would fractionalize it. Maybe 20% of every new BRICS currency is pegged to gold or to a commodity that is shown, the veracity and the immutability of which is shown on their distributed ledger. So I don't think it would be a one-to-one pegging. That would still give them the latitude to enact monetary policy. But I think gold would be the anchor. Instead of being able to let them print unabated, it would allow them at least to run monetary policy with some tether to prudence.
It's a scary world you're painting here, Andy. Again, is there a mastermind? Is this orchestrated by someone, or is this just how things develop and certain players are positioning themselves to take advantage of it?
Are there ever coincidences? I don't know. I would like the scariest part of it all, Michelle, is there a mastermind behind it? If it is, it makes it much more frightening. Because it is orchestrated, it is thought out, it is planned out. And maybe it's a combination of both.
Well, everyone, that's all I have for the video. As always, thank you for watching, and please put your thoughts and comments down below. And please do hit the like, share, and subscribe. It does help the algorithm. Thank you for watching.